99% collapse. London's IPO market vanishes overnight, sending shockwaves through the global financial system. The city, once a beacon of economic stability, now stands eerily silent, its trading floors deserted and its future uncertain. As panic spreads, global crash fears ignite a modern-day gold rush. Investors scramble to secure their wealth, buying up gold bars and coins at record rates. Vaults fill up as people seek the safety of precious metals, hoping to weather the storm. Meanwhile, Asia's crypto wars intensify. Singapore, with its forward-thinking regulations and tech-savvy workforce, seizes the throne as the new epicenter of digital finance. The city-state's rise is swift, attracting innovators and capital from around the world. The world's financial order is being upended. London, New York, and Hong Kong, once unshakable pillars of global finance, are now vulnerable, their dominance challenged by new players and disruptive technologies. The US dollar's dominance is no longer guaranteed. Traditional banking faces unprecedented pressure, with branches closing and anxious customers withdrawing cash, uncertain about what tomorrow will bring. As of October 18, 2025, new powers are rising while old empires crumble. The contrast between decaying institutions and gleaming new skyscrapers signals a profound shift in global power. In North America, the U.S. is rethinking its gold reserves, quietly reassessing its strategy in a world where trust in fiat currency is fading. This move could have far-reaching consequences for the global economy. London faces an existential crisis as its stock market collapses. Traders watch in disbelief as numbers plummet, and the city's role as a financial powerhouse is thrown into question. Meanwhile, Singapore is racing ahead, determined to become the world's digital finance capital. Startups and established firms alike are embracing blockchain, crypto, and fintech innovation at breakneck speed. These events are deeply interconnected, driven by fear, innovation, and the relentless pace of change. Every decision reverberates across continents, shaping the future of money and power. In this video, we'll unpack these seismic shifts, from the fortified vaults of Fort Knox to the cutting-edge fintech hubs of Singapore, and explore what they mean for the future of money, markets, and global influence. Deep in America's vaults lies a forgotten treasure, hidden away from the public eye, protected by layers of steel and secrecy. Over 8,100 metric tons of gold, the largest official gold reserve in the world, sits quietly beneath the surface, a silent witness to decades of economic change. Officially, this gold is valued at just $11 billion, a figure frozen in time by 1970s accounting rules that haven't kept up with reality. But times have changed. With gold prices soaring to historic highs, the true market value of this stash now exceeds $1 trillion, nearly 100 times its book value. Now, Washington is abuzz with debate over a radical idea: revalue the gold to reflect its current market price, instantly transforming the government's balance sheet. Overnight, this accounting move could add nearly $1 trillion to the U.S. balance sheet. No need for new taxes, no painful spending cuts, just a stroke of the pen. Supporters argue this would boost global confidence in U.S. bonds, strengthen the dollar's credibility, and provide a powerful signal of financial stability to the world. But critics warn of serious risks. They fear it could trigger a global currency war, as other nations scramble to protect their own reserves or even hint at a return to the gold standard, which could tie the Federal Reserve's hands in future crises. Still, with $1 trillion windfall on the table, the temptation is almost impossible for policymakers to ignore, especially as fiscal pressures mount. As America's national debt climbs ever higher and global trust in financial systems wavers, the nation's gold reserves may become its ultimate financial trump card, a last resort asset with the power to change everything. The world is watching closely. Will the U.S. take this unprecedented step and rewrite the rules of money for the 21st century? One thing is certain: This is a trend that could reshape not just America's finances, but the entire global financial order for years to come. Beneath the headlines, where the world's attention rarely lingers, a deeper story is unfolding in the heart of global finance. A silent crisis is brewing, almost invisible to the public eye, but its effects ripple through every corner of the economy. This is the tightening of liquidity, a slow, relentless squeeze that threatens to choke the flow of money. For years, central banks kept the financial system awash with easy money, flooding markets with cash and creating a sense of stability that many took for granted. But now, the Federal Reserve is reversing course, shrinking its massive balance sheet, pulling back the tide, and draining reserves from the system. As liquidity dries up, banks become more cautious, lending slows to a trickle, and borrowing costs begin to spike, making it harder for businesses and individuals to access credit. The risk? A sudden shock could trigger market chaos, just as it did during the 2019 overnight lending crisis, when panic spread in a matter of hours. Today, the stakes are even higher, and the system is more interconnected and fragile than ever before. Every dollar withdrawn from the system is one less chasing assets, fueling volatility, uncertainty, and fear across global markets. Investors are left exposed, searching desperately for safe havens as the old safety nets disappear, and traditional assets become more unpredictable. This liquidity squeeze is amplifying turmoil in major financial centers like London and Singapore, and sending shockwaves through the gold market as well. It's the invisible force accelerating the global search for stability. And for the bold, the hunt for new opportunities amid the chaos. The financial engine is groaning under the strain, and the world is bracing for what comes next. Uncertain, anxious, and watching for the next sign of trouble. As old financial centers stall, Singapore is seizing the future. The city-state's clear, innovative regulations have made it Asia's top crypto hub. Its crowning achievement, the XSGD stablecoin, fully backed by the Singapore dollar and trusted by regulators. XSGD bridges traditional finance and the digital economy, enabling instant, low-cost cross-border payments. Inspired by Singapore, other Asian nations are racing to launch their own digital currencies. While Hong Kong hesitates, Singapore's first-mover advantage is attracting global capital and talent. In the race for digital finance dominance, Singapore is setting the pace for the entire region. London's financial glory is fading fast. Once the world's IPO powerhouse, the city has dropped out of the global top 20 for new listings. The pipeline is dry, and capital is fleeing to more dynamic markets. Brexit, risk-averse investors, and outdated regulations have turned London into a financial graveyard. High-profile companies now snub London for New York, sending shockwaves through the UK establishment. Meanwhile, Singapore and even Mexico are attracting the deals London once took for granted. The lesson is clear. Financial dominance is earned, not inherited. In a world where capital flows to innovation, London's complacency has cost it dearly. The city's decline is a warning to all: adapt or be left behind. The gold rush is going digital. For generations, owning gold meant physical bars or complex derivatives, hardly accessible or transparent. Now, companies like StreamX are tokenizing gold, offering digital ownership backed by real, audited metal. Each token is a digital title to a specific bar, fully insured and transparent. Tokenization unlocks new features. Owners can even earn yield by lending their gold to vetted borrowers. This transforms gold from a passive asset into an active income-generating investment. The result? Gold is now as accessible and flexible as any digital asset. The definition of ownership is being rewritten for the 21st century. London's fall, Singapore's rise, and America's gold gamble are all part of a global rebalancing. The old order, dominated by Western capitals and the dollar, is giving way to a multipolar, tech-driven world. Power is shifting from legacy institutions to agile, transparent networks. Innovation, not tradition, will decide tomorrow's winners. For investors, the playbook is changing. Digital assets, tokenized commodities, and new financial hubs are the future. Understanding technology is now as vital as reading a balance sheet. Watch where talent and capital flow and which regulators foster innovation. The financial map is being redrawn. In this era of flux, fortunes will be made by those who adapt. The future belongs to the bold and the prepared.